Today, we're diving deep into the game plan for one of India's biggest insurance companies, HDFC Life. We've got our hands on the notice for their 24th annual general meeting, and this is where the company's leadership basically asks its owners, that's the shareholders, to sign off on their vision for the future. So let's jump right in and unpack what they're proposing.
All right, so here's our game plan. First, we'll do a quick refresh on what an AGM even is. Then, we'll look at the company's annual report card. After that, we get into the really juicy stuff. Who's in charge and what they're getting paid, some absolutely massive business deals they want to approve, and finally, how they plan to motivate their team and manage influence going forward.
Okay, so before we dive into the nitty-gritty of HDFC Life's specific proposals, let's just quickly get on the same page about what this meeting is all about.
So what's the big deal with an annual general meeting anyway? Well, you can think of it as the single most important conversation of the year. It's where the people running the company have to stand up and talk directly to the real owners, the shareholders. It's all about accountability, being transparent, and of course, setting the course for the year ahead. Basically, it's the company's annual report card session. It's a formal meeting that they're legally required to hold, where the management team presents the financial results, shareholders get to ask the tough questions, and everyone votes on key decisions that are going to shape the company's path.
All right, let's move on to that report card I mentioned. In this section, we're looking back at the last financial year and taking care of all the essential items that keep the company's gears turning properly. So first up on the agenda is what they call ordinary business, which is really just a fancy term for critical housekeeping. Shareholders are being asked to formally approve the financial accounts, give the thumbs up on a dividend payment, reappoint a director who is up for his scheduled re-election, and bring on a new audit firm to double-check all the numbers. It might sound routine, but this stuff is absolutely vital for good governance.
And speaking of rewards for shareholders, this is the number everyone's really looking for, right? The dividend. The board is proposing a final dividend of 2 rupees per share. For any investor, this is the bottom line. It's that direct cash payout you get from the company's performance over the year.
Okay, so we've looked at the company's performance. Now let's talk about the people who are actually responsible for it. This next section is all about leadership and pay. And let me tell you, this is always a hot topic for investors. It's about who's steering the ship and, just as importantly, how they're being rewarded for it.
First up, the company wants to bring 2 new independent directors onto the board. And these are some real heavy hitters. You've got Mr. Srinivasan, who brings 4 decades of deep financial and tax expertise, and then there's Mr. Jaiswal, a former director of the CBI, who brings a huge amount of experience in governance and risk. Their job is to bring that crucial, unbiased outside perspective to the boardroom. Now, let's get into the numbers. What you're seeing here is the proposed fixed pay for the top brass. We're talking about roughly 5.5 crore for the CEO, Ms. Vibha Padalkar, just under 4.7 crore for the deputy MD, and about 3.1 crore for the CFO. Now, this number includes their salary, all their allowances, and retirement benefits, and it's up for shareholders to approve. But wait, that is not the whole story. Not even close. On top of that fixed pay, there's a proposed variable bonus of up to 300%. That's right, 3 times their fixed pay. This bonus is tied directly to how well the company performs, and it's paid out in a mix of cash and stock. And here's the really clever part. 50% of this bonus is deferred over 3 years. This encourages the leadership to think about long-term sustainable growth, not just hitting short-term targets. Okay, on to our next section. And this is where the numbers get really, really big. We're about to decode the major business deals on the table, which means we're going to follow the money as it moves between HDFC Life and its closest corporate family members.
Now, before I show you the giant number on the next slide, we need to quickly talk about this term, related party transaction. It sounds super technical, I know, but the idea is actually pretty simple. It's just a business deal between 2 companies that are already connected. In this case, HDFC Life and its parent company, HDFC Bank. And because they're related, these deals need special shareholder approval just to make sure everything is being done fairly and transparently.
Okay, you ready for this? Here is the headline number. HDFC Life is asking for approval on transactions with HDFC Bank up to a limit of 41,500 crore rupees. I mean, just let that sink in for a second. That is a massive, massive figure. So the big question is, what on earth is all that money for?
So this isn't for one single deal. Think of it as an umbrella limit that covers a whole range of day-to-day business between the 2 companies. This covers everything from HDFC Bank selling insurance policies for HDFC Life and earning a commission, all the way to HDFC Life using the bank for its everyday banking needs, trading investments, and managing premium collections.
It's basically the financial plumbing that connects these two giants.
And just to put that enormous number into perspective, take a look at this comparison. The company is also asking for approval for deals with another related company, HDB Financial Services, and that limit is around 2,200 crore. This really just shows you the sheer scale and importance of the business relationship with the main promoter, HDFC Bank.
All right, for our last section, we're shifting gears from looking back at performance to looking forward at what motivates the team. This is all about aligning employee goals with shareholder goals and formally spelling out the promoter's role in the company.
So a really key proposal here is a new Employee Stock Option Scheme, or ESOS. And if you're not familiar, this is a classic way that companies turn their most important employees into owners. By giving them the right to buy company stock at a set price down the road, you perfectly align their own financial success with the success of all the shareholders.
Now let's look at the details of this new plan. They're setting aside just over 610,000 stock options. The goal is pretty clear: attract top talent, keep them happy, and give them a reason to drive performance. What's also important is that the options have a 3 to 4 year vesting period. That means employees have to actually stay with the company for several years before they can cash in, which is a really powerful way to make sure your best people stick around.
And last but not least, there's a resolution that basically formalizes HDFC Bank's rights as the sole promoter. It confirms that as long as the bank owns at least a 20% stake in HDFC Life, it has the right to nominate up to 2 directors to the board. This just ensures the promoter always has a direct line of sight and influence over the company's strategy.
So when you take a step back and you look at everything together, the new leadership, these huge financial ties to the parent company, the new ways they're motivating their people, it all starts to tell a story. And that brings up the most important question for any investor watching. With all these proposals on the table, what story is HDFC Life telling you about its vision for the future?